Hello, everyone. This is Stuart Fulton from Neutral Newsletter. Just coming on to talk to you on this Monday evening about global macro and Bitcoin. The news today was, Trump is out of the Walter Reed Hospital this evening and pushing for the stimulus hard. I expect it to happen this week, maybe Friday or Saturday or something like that, but we'll see. It's do or die now or never. I think it's got to happen this week or at least by next Wednesday. And if it does, we'll go from 5 trillion to 7 trillion or so, roughly, in government spending for just for this year, since COVID-19 started, which is unprecedented, hasn't happened before. And on some discussions and graphs that I've looked at today, I've seen where monetary policy and fiscal policy in the US is significantly similar to the late 30s, early 1940s, coming into World War II time period, where we had yield control, interest rates is near 0%, and then we had a very high debt to GDP ratio and total deficit to GDP ratio as well. But right now, our debt to GDP, as of today, 138%, 138%, which World War II, 1940 timeframe is the only time it's been close to that high. And it's higher than that, the 1940 range right now. So I expect us to eclipse 150% maybe next year, but I expect that, especially if this stimulus passes. I mean, it'll be probably even this year, and and then when you got zero interest rates and unemployment still high, the employment numbers weren't so good today, and I don't even think that the unemployment rate of 7.8% is accurate. I talked about that in yesterday's video. Shadow statistics shows 26.9. I'm not saying that's the end all be all, but a lot of people that are not counted as part of the unemployment have simply quit looking for work. And I have a lot of people older than me or my age and older than me are in that category. And I'm self-employed and count myself lucky to be in that camp. But the point is, the unemployment numbers are worse than what's reported. Inflation, CPI inflation isn't accurate. And there's just a whole lot of misinformation out there when it comes to government financial statistics. But the overall outlook for the rest of 2020, it and how that relates to Bitcoin. I mean, if this stimulus goes through, that's going to be helpful for Bitcoin. It's going to be helpful for Americans that are hurting right now. Especially, I would think, middle-aged and older Americans, because they're getting pushed out of the labor force well earlier than 65 in a lot of cases, and a lot of those jobs aren't coming back. So, I think the unemployment picture is a lot worse than what we see in the news. Um, and the inflation is worse than what we see in the news as well. It's not really reported. CPI does not even look at a lot of the day-to-day expenses of Americans, like food, cable bills, gasoline, rental and travel expenses, and just what it takes to run a house. So, and I would know, I've been a homeowner a very long time. So we have those issues of inflation being very high, unemployment being extremely high, yet the yield curve being controlled by the Fed at very low rates, just like 1938 to 1942 timeframe. And in those years, I mean, we had a war going on, which really helped demand and pretty much got us out of the Great Depression. But we don't have a war going on right now. We don't have a big stimulus to demand other than the Fed stimulus. And that's obviously causing our M2 money supply to go way up, our debt to GDP ratio to go way up, and is really. And the other thing I talked about, Lynn Alden talked about it today as well. and she knows a lot more than I do about global macro. I will admit right away, but is that a lot of this money that's being printed, money supply, stimulus, a lot of it is not going to middle class America, Main Street America. It's getting tied up as bank reserves and ending up in major corporations, Fortune 500 corporations, FANG stocks, places like that, and it's pumping asset prices, real estate prices, as well as, of course, stocks, uh, S&P, Nasdaq, and Dow Jones, but where it's not really helping is the employees of these companies and small business owners and just small company employees. And middle class Americans or lower class Americans. They're the ones, especially the lower 50% of the socioeconomic scale, they're the ones that are really being hurt by COVID 19 and its effects. And that's where Bitcoin comes in. My Bitcoin ATM machines and Neutral ATM are starting to really pick up some steam, and we're seeing a lot of interest. Both people asking me about how to get into the Bitcoin ATM business, and people buying Bitcoin from our ATMs. And we're seeing a lot of interest from business owners that want another ATMs in their stores. We have the opportunity right now to put in 7 machines. We've got 2, and we could put in 7. So over time, not right away. But the point is, there is tremendous demand for Bitcoin. And also, China has tremendous demand for Bitcoin. Even the Chinese government is pushing that demand. That came out today. That's another piece of Bitcoin related news that I thought was very, very interesting. And so, with demand, like hash rate very, very high, demand spiked up just like today or yesterday, spiked up in a big, big way. And we've got Bitcoin dropping down to 10,370. I guess that was late last week. And then now, or Friday, I believe it was, Friday, it dropped to 10,370 after Trump was admitted to Walter Reed Hospital. But now it's back up over 10,800. So, I mean, it's really recovered very nicely from that dip, both for the BitMEX situation last week and the Trump situation last week. So it's already recovered most of that and doing extremely well. So, what does that bode for the rest of this week and the next few weeks until the election? I mean, I really thought, and I've said it in my videos and in my blogs, that I really thought that Bitcoin would wait until after the election to take off. And I'm not saying that it won't do that, but I was looking at some charts today where there's a wedge pattern that is starting to tighten up, and I'm surprised at how fast the Bollinger Bands have tightened up. They're down to 0.03 today, this lunchtime today. So, and dropping below that this afternoon. And they were like Sunday, they were 0.07. So they've really dropped quickly. Um, I still think that they could get lower, get closer to just 0.00. And really, that would cause the lower those Bollinger Bands get, the tighter it gets, the less um, the less number of buyers and sellers, the less activity on Bitcoin, the bigger the jump of the Bitcoin price. And Ethereum is going to come with it. Ethereum's up too. It's up $50 a coin just since late last week. So if this stimulus gets passed, that should be the catalyst that lights the rocket. And I would expect Bitcoin to really take off. And we're getting more interest with our Bitcoin ATMs. So I wouldn't be surprised. Its timing is a struggle for everyone, myself included, but I wouldn't be at all surprised to see Bitcoin, start picking up over 11,000, 12,000, and then some even before the election by a little bit, maybe the end of this month. So we'll just have to wait and see this stimulus and this big push to stimulate the economy before the election on November 3rd. That could be the catalyst because Bitcoin is looking healthier than it was last week. Knock on wood. Hopefully, we don't get any more bad news. And that stimulus is going to have a big impact on the global macro picture too, because it's going to push up M2 money supply. It's going to push up debt to equity ratio, and it's probably going to push us closer to inflation. And we started off in the very beginning of this talking about inflation versus deflation. Well, an inflationary environment is going to be better for Bitcoin and gold or silver than a deflationary environment short term. Now, long term, I think a deflationary environment would be very good for Bitcoin long term. But in the short run, like if we start seeing stock prices drop off dramatically uh, because of deflation, that would be a negative. And how would that happen? Well, it would happen because there's stimulus that's getting tied up with bank reserves and the Fed buying treasuries, and then that money never getting into the economy. And that's really been the problem since March, and even going back to 2008, 2009, because we were having QE and a lot of stimulus all throughout these last 11, 12 years. So these problems are not new. They've gotten a lot worse this year than any other prior year by far, but they are not new problems. And we did see some deflation, probably not as much as I would have thought we would see. And the jury's still out on how fast are we going to see inflation. I mean, this may all just kind of slow down with the inflation as well. And it, with the money supply growing and the stimulus packages and the stock market getting propped up the way it has been so far, it has been relatively successful. And they may be able to kick the can down the road and evade heavy deflation and evade heavy inflation by just propping up the stock market. If that stock market goes down dramatically, like we see a 40% pullback, a 50% retracement pullback, that's when it's going to get real. Bitcoin would go down with it, but I think most definitely if we did see a quick deflationary event, then Bitcoin would recover faster than stocks. There's no doubt. We saw it in March. Absolutely, we saw it in March and April, and so that's the scenario that would play out. There's no doubt in my mind about that at the end of the year or next year if we did see a deflationary crash on the stock markets. But the real question is, can they string this out? Can they string this out? The Fed and the ECB, global central banks all around the world, can they string this out and keep their markets afloat? And if that's the case, then we'll just see a slow malaise into stagflation. And that's still good for Bitcoin, but we may see a jump up in the near term to 13,000 or so, and then it may slow down going into the new year and not get to the all-time high. I'm still just a little not quite trusting that we'll get there by the end of this year. I'll believe it when I see it, but I've been disappointed before, and I just know how we are able to just string things along with basically by just manipulating the stock market and this yield control. I mean, one thing the Fed is good at is stimulus for the stock market that helps the stock market and controlling the yield curve. They've proven over the years that they've been pretty good at that. So if they're able to continue keeping that ball rolling, we may have to be more patient with Bitcoin, but it's still going to be a much better play than a lot of these other opportunities like stocks. So that's what I have for you today. I'm going to put a graph up on Twitter to go with this. that just kind of shows, the late 30s, early 40s compared to right now, and how similar they are with the monetary policy and fiscal policy being so strong, yet interest rates being so low, and yield curve control. So we'll get through this as a country. Our economy will get through this. I'm feeling more confident about that. Uh, but I also feel really, really confident that Bitcoin is going to be just a huge boon for all of us who invest in it. So get off zero, and we'll talk to you soon.